The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Amid escalating geopolitical tensions, rising energy demand from AI and electrification, and the urgency of decarbonization, nuclear energy is making a global comeback. DBS's latest CIO Vantage Point report, The Nuclear Renaissance, outlines how nuclear is emerging as a powerful contender in the clean energy transition. Now, the report argues that modern reactor innovations like small modular reactors, coupled with a need to reduce dependency on fossil fuel supply chains, are shifting both policy and investor sentiment. With uranium prices climbing, next-generation reactors gaining momentum, and utilities forming new partnerships with tech firms to meet growing data center power needs, the stage appears set for a multi-decade nuclear revival. So what opportunities does this nuclear resurgence open up for investors today, and how might that evolve over the next decade? How should investors navigate the nuclear value chain, and what are some of the early indicators of long-term winners in this space? Well, to find out more, joining me now is Daryl Ho, who's a senior investment strategist at DBS. Daryl, welcome to the show.
Thanks for having me.
Thank you so much for joining us. Well, Daryl, nuclear energy is no longer just a climate solution, but also a geopolitical and technological imperative, driven by AI demand, supply chain risks, and electrification. So what are the key macro drivers that make now the right time for investors to revisit nuclear energy as a thematic opportunity?
Right. I think there are actually a total of 4 crosswinds, which is quite rare for any investment opportunity to have something that has so many crosswinds coming together at the same time. Right. The first would be the importance of energy security. We are seeing, zones of prolonged tensions really in Europe and the Middle East, which makes for volatile oil prices. And that hinders long-term planning for both countries and corporations. And so the nuclear energy supply chain would be a viable avenue for energy diversification. Right. Secondly, you're also seeing growing demand for processing power. Right. Any one of us who has used AI would know that they have their hands on a transformational technology. But a GPT query would require as much as 10 times the power as a Google search. Right. And it's estimated to consume energy equivalent to 17,000 US households on a daily basis. Right. This also means more data centers, which require tremendous amounts of energy to run. Right. So nuclear power is a technology that could meet this demand. Next, you have climate change, of course, right? Along with the rise in energy demand is that its production has to be clean and sustainable, and nuclear energy is a zero-emission, clean energy source, which is why 31 nations have pledged to triple nuclear energy production before 2050 to combat global warming. And finally, really, the key to this puzzle is really the technological breakthrough with SMRs, right, which stands for small modular reactors. This means lower startup costs and deployment flexibility of nuclear reactors, which could then lead to more widespread adoption of nuclear power.
Well, nuclear reportedly has high energy return on investment, or EROI, low emissions and reliability, positioning it as a critical piece in the clean energy puzzle. So, Daryl, how does the role of nuclear energy play a role in global energy transition portfolios over the next decade, particularly when balancing sustainability and returns?
Yeah, that's a great question, right? So let's first talk about the concept of EROI, which you've explained, energy return on investment. And it's really quite simple. You have to invest energy in any source to extract energy, right? So if, for example, with crude oil, you need energy to drill, to extract, to transport, to refine, before you actually have the petroleum, for example, to return energy through combustion. And needless to say, it's only viable if it returns a lot more energy than is used to invest to produce it. Right. So across human history, right, progress was mostly made when we transitioned from low EROI to high EROI sources. Right. So, for example, in the 18th century, we used traditional biomass, which is a 4 times EROI source. Eventually, this gave way to coal and refined crude, which was a multiple on return on investment. Right. That's a 30 times EROI, and that happened in the 19th century when I believe it kickstarted the industrial revolutions that has since accelerated world growth. But, while, fossil fuels has given us a tremendous amount of growth, we're now facing the cost of climate change, rising sea levels, extreme weather. So we have to seek more sustainable sources of energy production. Unfortunately, renewables such as solar and wind, you only have EROIs of, 4 to 10 times, which is a far cry of the 30 times that we've been enjoying with fossil fuels. And that would be a regression in our progress. And so nuclear energy seems more in line with the arc of progress, right? It has an EROI of 75 times, and it has zero emissions, right? So it's almost the only logical answer we have to the dilemma of growth and sustainability as we've posted.
Okay. So with fossil fuel choke points and rising protectionism, I mean, nuclear energy may offer a viable path to energy sovereignty, especially through diversified uranium sources. So with that in mind, Daryl, how do you expect energy security concerns and deglobalization to structurally reshape investment strategies around nuclear technologies?
Actually, you see instances of energy security concerns everywhere today, right? I think most recently you see conflict between Israel and Iran, and that has threatened passage in the Strait of Hormuz, right? Which is a narrow waterway where a fifth of daily crude oil flows through, right? Energy security is also really significant with Europe, right? Shortly after, conflict broke out between Russia and Ukraine, the economic relationship, between Europe and Russia was severed, and none more symbolically than with the physical demolition of the Nord Stream gas pipeline that was actually meant to power European industry for years. So now we see Germany, Denmark, Italy also talking about plans to restart their nuclear power plants. And then you move on to the US with President Trump, right? He's been very explicit with his desire to reshore US manufacturing, rebuild the US industrial base, and everyone today talks about, the labor limitations, the capital limitations of doing that. But very few have talked about the energy limitations. And the truth is that large industrial bases, require huge energy loads. And did you know today, China produces more than twice the amount of electrical power than the US does? Right, so, the Trump administration just last month in May passed a series of executive orders to reinvigorate the nuclear industrial base. And you can see, across the world, the governments are warming up to the idea that nuclear energy is actually critical for energy security in a future that seems increasingly uncertain.
Right. Well, meanwhile, uranium prices have surged post-pandemic, yet DBS notes they remain far from the 2007 peaks. Is a so-called strategic uranium reserve era on the horizon, Daryl? I mean, what will that mean for markets?
Okay, so good question. The strategic uranium reserve, the hypothesis that we have, right, and it's a play on the idea of the strategic petroleum reserve that the US has to actually mitigate supply shocks with oil. So by extrapolation, if nuclear energy does grow in adoption, it makes sense that countries also start to build reserves of uranium. Enriched uranium has a half-life of 700 million years. So, for all intents and purposes, you can consider it to have an indefinite storage life. And if this becomes a reality, right, it's a big if, but if it does, it would create a demand that's really in excess of just pure consumption, right? And certainly bullish for those in the upstream portions of the nuclear value chain, right? That's where you have uranium miners, companies with conversion and enrichment capabilities as well.
Okay. Well, then, given uranium's strong long-term performance and rising demand, how should investors see its role evolving within a commodities portfolio?
Right. So at present, I would have to say, uranium is not a component of any of the mainstream commodity indices. But anything is possible should it become a key source of energy production as we are postulating. Once it becomes part of an index, I suppose that would draw a lot more investor interest and flows, right? And, we saw what the approval of a Bitcoin ETF did with Bitcoin prices. So, by inference, it does look like index inclusion would draw more interest.
Okay. Well, uranium still trades mostly OTC, unlike, oil or copper. Does this limit liquidity?
Yeah, great thing that you pointed that out. I think there are some liquidity drawbacks, but, it should not detract from the investment case. You mentioned OTC being a limitation, but, the bond markets are also an OTC market, but it still facilitates, hundreds of billions of dollars in trade a day. So I don't see that as a major concern.
But then could uranium become a more mainstream tradable commodity, and what implications might that have for investor access and pricing dynamics?
So right now, there are already areas to trade the commodity with physical uranium trusts, right? But I think there are still certain investment restrictions with asset managers, around, mining companies as well as companies that have some relation to weapons manufacturing. So there could be some, regulatory limitations at present, but I would suspect it will take some time to truly become mainstream once you can see real-world applications in nuclear energy.
Okay. Well, in terms of value chain exposure here, I believe DBS has outlined 4 investable segments: physical uranium, miners, utility, and reactor manufacturers, each with distinct risk-return profiles. So, Daryl, which part of the nuclear value chain offers the most compelling, opportunity today, especially for medium to long-term investors?
So if you follow the train of thought that we have, we believe that if this thematic does have legs, the whole value chain would benefit. And I would suppose they are compelling for different reasons, right? For the upstream companies, for example, like the physical uranium or uranium miners, there could be, by our calculations, more than 100 million pounds per year of supply deficit by the year 2040, right? This means that the market could be anywhere from 20 to 30% undersupplied in uranium over the next 10 to 15 years, which, works out to be a long-term tailwind, right? For downstream companies, we have power producers, which, benefits from long-term contracts, predictable cash flows, which is something investors like as well. You mentioned also, reactor manufacturers, which is something we like. But this is a little like investing in startups, right? Because, many of these designs are still conceptual and perhaps in their basic design phase. So if you pick a winner here, you would likely have multi-bagger returns, but, it's still a very competitive space. Gun to my head, right? The valuations in the downstream segments appear quite lofty, compared to those in upstream. So if you were a value investor, you might prefer upstream valuations. But ultimately, we think you should be well diversified across the value chain in this thematic.
Makes sense. Well, Daryl, then what is your view on investing in a physical uranium versus, uranium-related equities or ETFs, given the current stage of the nuclear cycle?
Physical uranium. I think we can safely conclude that, unlike gold bars, no one's going to keep physical pellets of enriched uranium under their pillows at home, right? But jokes aside, physical uranium is simply a pure on the demand-supply imbalance that we described. It can be a lot more volatile, right? A nuclear-themed ETF, like you mentioned, is interesting because it allows the investor to participate in the diversified manner across the entire supply chain. I suppose one thing to note as an investor is that participating in this theme, requires you to stomach a lot higher volatility because it's prone to both geopolitical risk as well as technological change. Right? So, for example, when DeepSeek was announced just in January this year to increase AI efficiency, lower power requirements, the nuclear complex actually saw a 30% drawdown over just a period of 2 months. So, given that this thematic is still in its early innings, you would have to ride through some volatility for the long term if you want to see it come to fruition.
Okay. Well, it looks like small modular reactors or SMRs, they are often highlighted as game changers here. How close are we to commercial viability and where do you see first mover advantages?
Yeah, good question. Fun fact, we're actually commercially viable already, right?
Oh,
so,
okay.
for example, China has connected a 200 megawatt, SMR in Shandong. Russia has a floating twin 35 megawatt plant in the Arctic. Really, it's more in the West, right? They're targeting deployment, more rapid deployment by the early 2030s. But as we stand, more than 90% are still undergoing design stages. So if you're a first mover, as you've asked, I suppose you can benefit in three ways, right? The first would be licensing, because regulatory approvals in the nuclear space are quite slow. I think the license earlier allows for much faster deployment, right? Logically, right? Secondly, pricing, right? Nuclear power contracts are very long term. So if you're an early entrant, you can secure market share very early for a very long time. And finally, government guarantees. I think, as we've spoken, President Trump himself has, opened up avenues of subsidies when it comes to nuclear energy and its strategy around that. So earlier entrants can tap on such guarantees to lower their funding costs of operations in the long run.
Okay. Well, then, Daryl, with AI models also increasingly energy hungry, how do you assess the likelihood of nuclear energy becoming the default baseload for tech infrastructure?
Right. Okay. So if we are serious about climate change, we have to pivot to low carbon energy alternatives, right? But if we only pivot to solar and wind, we have a bit of an issue, right? The sun isn't running 24/7, neither do wind speeds stay constant. So for baseload strength, as you're discussing, you need sources of energy that has a high capacity factor, right? That means that you have to have it run all day, every day, right? So if you think about, renewable sources, hydroelectric power can solve some of that, but, not everybody has the benefit of having a large dam in their backyard, right? Nuclear reactors, on the other hand, have a 92% capacity factor, and I think that makes it a prime candidate for baseload generation if you really put your thinking cap on.
Very interesting. I mean, this is a very interesting topic. So to wrap up our conversation here, Daryl, what are the top risks you see in this nuclear thesis and how should investors position accordingly?
Yeah, I think this is a great question. Playing devil's advocate to our own strategy. We've thought about three things, right? The first is, I think, clearly public opinion, right? There is often a wide gulf between what's practical and what's perceived, right? So nuclear energy, as we've discussed, has all its merits. But so long as people have a negative perception, it will be difficult for policymakers to push it through in a very aggressive way. Secondly, of course, is technological competition, right? Current technology in nuclear relies on nuclear fission. So if there was a breakthrough in nuclear fusion, which is a completely different technology, I think that would undermine this thesis. But by our analysis, we think that nuclear fusion is still several decades from commercial viability. And of course, the final one would be a large-scale accident, right? You can imagine that this thematic would set back several years if there was a major nuclear accident in the near term. But this is a black swan type event, which affects really all investment themes, and is not normally a reason to avoid the thematic. If the thematic does make sense in the long run.
Right, definitely. Some great insights from you today. Thank you so much, Daryl, for joining me today.
Thank you. Thanks for having me.
Thank you. That was Daryl Ho, who is a senior investment strategist at DBS. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.